Hello, hello, good morning. Good morning to you. It is Thursday morning, and guess what that means? It means it is time for the Her Investing Coffee Talk. Yes, it is. Thank you so much for joining me. I really super appreciate it. And as you come in, please introduce yourself, say hi to the community. We usually have some really great chats going on, and as you hear things and you have questions, please pose them in the chat as well. And I just want to say thank you, a big super thank you. This week was so amazingly heartfelt. I had some really amazing compliments come through about these chats, and I'm going to get teary-eyed because it means so much to me that people are watching it, they're understanding my concepts, and that you guys are getting it. You guys are getting it and you're understanding it, and it's just wonderful. So thank you so much for the compliments that have been coming through. Like they're so wonderful. And I even had one of the best compliments of all time, and that compliment was that someone binge watched during the snowstorm my episodes, and I'm like, oh, someone binge watched me. Like that was the best compliment ever. So all of my episodes of the show are recorded and put on Facebook. So if you do want to check them out, feel free to. I don't expect you to binge watch them, but if you want to get caught up on some of the concepts that we've been talking about and practice your language of finance and learn and gain confidence in a fun way, then I really invite you to start looking at them. Oh, and I didn't introduce myself. My name is Jessica Perrone. In case you didn't know, in case you're just coming across this, I am the founder of Her Financial IQ. And Adina is joining us. Hey, good morning, Adina. Thank you for being here. I love that you're here. It's wonderful. And so a little bit about me is that I left finance 3 years ago after a 16-year career. Yeah, a 16-year career in finance. And I left to stay at home with the kids. I did. It really was a shock. The commute was a lot, 3 kids a lot, and I was just like, I need to spend time with my kids. So I continued to trade. And what surprised me was the barriers that women put up when it came to talking about money and investing, and also how afraid women were to even approach their financial advisors, or all the stories that I heard about women feeling talked down to when they went to see their financial advisors. And even this week in my classes, in 2 separate classes, I had women reporting to me that their financial advisors or financial advisors they went to that were men were condescending and made them feel super duper uncomfortable. So I have a new initiative then, okay? I have something that I want to try out, and I really feel strongly about this because your financial advisor is your tool and your financial health tool belt, right? They are there to take care of you. Just like the doctor takes care of your physical health, the dentist takes care of your dental health, the hairdresser takes care of your hair health, right? Your financial advisor helps you with your financial health. And if they are not there for you, and if they are not taking care of you, and if they are making you feel uncomfortable, it is not the right fit. And you have the right to change financial advisors. Yes, you do. You have that right. So what I am going to do is I am going to put out an APB on Facebook. Yes, I am. And even if you are here and you're watching the broadcast, if you are a woman and you have a financial advisor you love, that you absolutely love, I want you to send them to me. I want you to send me their name, their email address, their phone number. Give me a little bit about why you love them. I want to hear about that and what state you're in. And what I'm going to start doing is putting together a database of women-friendly advisors. Now, there's so many cons out there when it comes to like databases. They want to catch your emails, and then they broker that information out to financial advisors. That's not what I want to do. I legitimately want to make a woman-friendly financial advisor database because it is so hard to go through and dive through financial advisors out there. So that is the new initiative. That's one of my announcements. So if you have a financial advisor you absolutely love, the state you are in, their name, email address, phone number, and a little bit about why you love this financial advisor. Okay, please. And we can start creating this database all together of and helping other women find women-friendly financial advisors. Okay, awesome. So that's a new initiative that I'm going to be putting together. That's one of my announcements. Okay, so a little bit more about me. I am an investor. I'm an experienced investor. I am not a financial advisor. No, I am not. And I'm not looking to manage anyone's money. No, I'm not looking to do that. I am genuinely just trying to educate women so they feel empowered and so they're not taken advantage of in their lives. Yes, I want them to have control over their own finances. And that is my hope and wish for you. So even if you come to my chats and you have the confidence to go to your financial advisor and start the dialogue about your monies, I'm happy. I'm happy with that alone. But should you wish to expand upon that knowledge base and take some classes with me, great, wonderful, amazing. But really what I'm here to do is to empower women and let them know that they can be in control of their monies and their investments. Okay. And for those that aren't familiar with my classes, I make them super fun. And we start off with the basics. So we start off about things you should know even before investing, like your emergency funds, the different types of savings accounts out there, APYs, various places where you can go for higher yields. We talk about credit card debt. We talk about credit scores because sometimes it's easier to save money than it is to make money. Okay. We even talk about, ways to break the ice with your financial advisor. We talk about what stocks are. We talk about, different things to look at in your everyday life when considering different investments. Okay. And one of those tricks that or strategies, I should say, that I teach women is to look into their everyday lives for potential investments that they believe in, companies they believe in that could be potential investments. And that's how the identifying investment worksheet came across. So what I would love everyone to do is grab their identifying investment worksheet, because today we are going to start and explore the communication sector and the information technology sector. Okay. So go ahead and grab that. If you have not downloaded the sheet yet, the worksheet, in the description of the event today, there is a link for the identifying investment worksheet. You can go there, you can download it, and you can start, recording and thinking about and looking at and building that sheet of companies that you believe in. Okay. And then ultimately, we want to diversify that cross sectors. And that's why we visit different sectors every week as well. Okay. So let's start here. Okay. So today's chat is inspired by communication and information technology sectors. Okay. And the reason why is because we had a lot of earnings this week that were information technology and communication sector. And in my classes, they had actually said, hey, Jessica, this week, can you talk a little bit about earnings and what they are? So first, what I wanted to do, though, was I was thinking about, the earnings in the companies, and I was thinking about my morning routine. And my morning routine may be similar to all of you guys, but my morning routine looks something like this, okay? I wake up. Okay, I go downstairs, I make my cup of coffee, I feed my dog, I let my dog out, and I pick up my phone and I start checking my text messages. Okay, I start checking my emails through Gmail. I start reading email, yeah. And I also start reading my headlines, my financial news headlines through Gmail as well. Okay, so far I picked up my Samsung phone. Okay, I'm reading my headlines on Gmail. Okay, and I get my Wi-Fi and cell phone service through Verizon. Okay. And I listened to my Bloomberg radio through the app, which I downloaded from the Google store. Okay. See, there's a method to my madness here. There is a method to my madness. Okay. And if you are thinking what I'm thinking and you start thinking about like communication and tech stocks that you'd like to put in the chat, you can go ahead and start putting that in the chat too. So, and you know, you can put your those things that you go to in the morning as well. Okay. And then after, and while I'm like doing all this, I also check how my posts, my social media posts are doing on Facebook and on Instagram. Okay. And then, so I do that really quickly while I'm making my coffee on here. And then I actually go and sit down with my HP laptop, which is a Chromebook. Okay. So we have HP and we have Chromebook, Google again. And there is a little sticker on my laptop that touts that it is an Intel Core i3, whatever that means, chip in it. Okay. So I was like, oh, okay. I'm like thinking about all these things. And then I started thinking about my kids and their mornings. Okay. So then I start thinking about my kids. And so their mornings are a little bit different than mine. Okay. Besides me yelling at them to get out of bed and come on, 5 minutes. Does anyone else do that? Yeah, like I'm like drill sergeant. Come on, 5 minutes. We gotta get out the door. We gotta get out the door. But besides that, mine is a little bit more routine and to the point. Theirs is a little bit more chaotic, and I gotta do a little bit more yelling. Anyhow, the other way that their mornings differ from mine is that they do not have Facebook. No, none of my kids have Facebook, and they sometimes look at Instagram. Sometimes, yeah. They do have iPhones and MacBooks. Okay, so we're Apple universe. I do have an iPhone that I use for the kids and communication with the kids, but I actually prefer my Samsung, believe it or not. Yeah, I prefer it. And they do not text anyone anymore. My kids do not text except for to me and through the iPhone chat, the family chat. But they do not text their friends through the phones. They snap their friends. And snapping is their number one way of communication. Okay. So they use Snapchat for that. And I don't know if you guys have noticed this, but my kids actually have anxiety. They have anxiety if they potentially lose their streaks. Do you guys understand what this streaks is? This streak thing? Okay. So whatever it is, they've created this thing called streak. Okay. And it's how much you message other people. Okay. And I guess it's a leaderboard or whatever it is. But my kids have anxiety, actual anxiety of losing these streaks. Okay. So another thing that's much different for them than for me is they are getting up to date on news and events and everything that's going on in their little ecosystems through TikTok. Yes. They're getting all that information through TikTok, whether it is, basketball highlights from my basketball player, whether it's top fashion things for my oldest, and even like silly, funny things as well, or even science things. I know that my second oldest also really likes some of the science things that come through. So personally, I'm not a TikToker. Personally, I'm not, but it is ingrained in my kids' generation. Okay, so it's even, and I had a poll yesterday in my teen class as well, because we were talking about, it was our first day of the IAT class, which is when they graduate from their before investing class, and now they're starting to think and research things like investors. So one of the things that I recommend them doing is watching this show. And I said, okay, it's on my Facebook page. And I saw these blank faces and I'm like, how many of you guys have Facebook pages? None of them had Facebook pages to watch my show on. So I'm like, oh my goodness, I'm going to have to, start adding these to YouTube because they all use YouTube for videos. And I have to admit, even I use YouTube I subscribe to YouTube TV. I have recently, so I can watch my football games. I love, love, love football. A huge Steeler fan. Just side note, big Steeler fan here. And I love football. So in order to watch all my games, I did subscribe to YouTube TV. And also speaking of sports, as we're rattling off companies here, communication and tech companies, whenever I'm on the treadmill in the morning, I do watch ESPN. Yes, so I can see my basketball and football highlights, which is owned by Disney, and I watch that while I'm running on the treadmill. Yeah. So I covered a lot of stocks here, right? And I'm also, there's a reason why I told you this story too. So let's break down these companies that I just mentioned by sector now. So we have, under the communication sector, we have Alphabet or Google, and their tickers, actually they have like two tickers. They have Google, GOOGL, and then they have GOOG, GOOG. And then we have Verizon, how I get my internet, right, and my cell phone service. That ticker is VZ. And then we have Meta Platforms, formerly Facebook. That ticker is FB. And they own Instagram, Facebook, and WhatsApp. And also the Oculus VR as well. And then also under communication, we have Snap Inc., right? From the teens, and that ticker is SNAP. Now, those are just, the communication names that I personally, that come to mind when I'm personally getting dressed in the morning and thinking about these things. But what I also did for you guys was I went to my Fidelity account, and they have a really neat feature where you can toggle the largest companies in a sector by market cap. Yes, it's a really neat feature, and you can access that in the Fidelity account. And so what was interesting to me was the top 5 largest communication stocks by market cap. And those are Facebook. Yep. So we were talking about that. That's definitely, something that is part of my morning. Disney's part of my morning, ESPN, COMCAST, CMCSA, for Verizon. Yep, that's part of my morning too. And then number 5 is Netflix, NFLX. Now, I'm not a big Netflixer. I know that there's a lot of people out there that are Netflixers, but this was really interesting to me because the largest communication stocks were also part of my morning routine stocks. Yeah. So this is just an example of looking for trends in your everyday life and taking those trends and then adding them to your identifying investment worksheet, because as women and as super consumers, you get a feel of what is happening. You do. And this sort of intuition can really help you when you are honed in on it. Okay. So let's move on to information technology. Okay. So underneath information technology, this, as part of the morning, we have HP Inc. Okay, right? That was my laptop, and that ticker is HPQ. And then we have my chip that is in the HP laptop, and that's my Intel Corp. That's INTC. And then I talked about my kids' iPhones and MacBooks. That ticker is AAPL for Apple. And then I did the same rundown for information technology stocks as I did for communication stocks. And there's actually something that really surprised me here. Something that really, really surprised me. And guess what? It surprised my investing 2 class this week as well. Because we were talking this week in investing 2, we started looking at the different sectors out there and the different industry groups. And a lot of people And my students and a lot of people were really surprised by these two companies that are number 2 and number 3 in largest by market cap tech stocks. Okay, you ready for this? So number 1 is NVIDIA, and that ticker is NVDA. Okay, and number 2 is Visa, and that ticker is V. Does that surprise you? Does it surprise you that Visa is a tech stock and not a financial stock? Does it surprise you guys? Think about it. Think about it. And you know what? This is going to be a quiz. I want you guys to think about it and message me or message in the chat why you think Visa is in tech and not in financials. Okay? You tell me that. You tell me. And it's interesting because Fidelity will have it as tech, TD Ameritrade will have it as tech, but Google actually has it, and Yahoo actually has it as financials. That's something else to keep in mind. Which one is right? I'm defaulting to Fidelity and TD Ameritrade since they are the trading accounts. That's where I'm defaulting to. Okay, so moving on. The third largest, and I'm doing US. There were some ADRs in there. I didn't want to get into ADRs with you guys. So I wanted to do the largest US companies by market cap. Okay. So, and then number 3 was Mastercard. That ticker is MA. And then we have Adobe, and that's ADBE. Isn't that interesting? Isn't it interesting that number 2 and number 3 of the largest US tech stocks are Visa and Mastercard? Think about that and put in the chat. Put in the chat and let me know what you are thinking. Okay, so there was this phrase. There's a phrase that was coined to talk about Facebook, Amazon, Apple, Netflix, and Google. Okay. And most people refer to this as tech companies. It's called the FAANG. It's what they're referred to as the FAANG. And most people think about this as tech companies, big tech companies. But what did you guys just learn? What did you guys just learn about these companies? Are they tech companies? Are they tech companies? Well, Facebook, communication. Amazon, consumer discretionary. Apple, Apple is information technology, yep. Netflix, communication. And Google, communication. How about that, right? Isn't that interesting? Isn't that super interesting? So when you're looking to diversify your identifying investment worksheet, this is something to think about. This is something to think about. Now, something else to think about was the earnings for Facebook and Google this week. So there had to have been a reason why I started off with me versus the kids, right? There had to have been a reason why I started off. And this is the method to my madness. Okay, this is the method to my madness. So let me read to you the recap of Meta's owner of Facebook, right? Because they changed their name. They changed their name to Meta. So let me read this to you. So this is the summary of it. And then I'm going to actually go into the bullet points of the earnings report as well. Okay. And then I'm going to go to Google. I'm going to go to Google after that. And we're going to see, and then we're going to talk about why it really isn't surprising after we saw, after what I talked about this morning, what happened. Okay. So here it goes. So shares in Meta fell by over 20% or $200 billion in after-hours trading on Wednesday after the company said it expected its first quarter revenues to fall short of Wall Street expectations because of increasing competition from newer platforms such as ByteDance's TikTok. Right? That's not surprising. That is not surprising at all, because as I saw with my kids and my teens in my class, none of them have Facebook. This younger generation, not one of them had Facebook accounts. Can you believe that? None of them. So was this surprising to me? No, it wasn't, because I was able to do a sample polling of my teens. Okay. So this is what Facebook's earnings looked like, and this is as reported by CNBC. So let's look at this. I'm gonna go into these matrices, and then I'm gonna go in and just explain a couple things about earnings. Okay, so CNBC reported this about Facebook's earnings. They said Facebook shares tumbled more than 20% in extended trading on Wednesday after the company reported disappointing earnings, gave weak guidance, and said user growth has stagnated. Is that surprising? User growth has stagnated? Not surprising to me. And here are the results. So then they break it down by, the actuals versus expected. Okay. So earnings per share was 3.67 versus 3.84 expected. So that was a miss. That's not good. That's no es bueno. That's not good to have a miss. Okay. And then on revenue, okay, it was kind of in line. It was 33.67 billion versus 33.4 billion expected according to Refinitiv. Okay, it's one of the companies that provides estimates. And I'm going to talk about estimates a little bit. Just give me a minute here, okay? But what was honed in by Wall Street are these two things. It's the daily active users, the DAUs, and the daily active users were 1.93 billion versus 1.95 billion expected by analysts. So they missed on daily active users, okay? And then on monthly active users, they missed by it. So the actual was 2.91 billion versus 2.95 billion. So they missed on that as well. So what this is saying is that their users are going down. Okay, their users are going down, that they potentially could be stagnating. That is the spin that Wall Street put on this. So with that said, it's really super important for Facebook to have eyeballs in their platform because they make money from their ad dollars. And if there's less eyeballs on it, then there's less, there's less and views and clicks and whatnot. That's how they make their monies, right? So if there's less views and less clicks, there's less revenue. The other item that was not here in the drop down for Facebook was how much money they have been spending on the metaverse. Okay, they've been spending a crazy amount of the metaverse, and people in Wall Street were expecting there to be some profits based on that. They were expecting that, but you know what? The profits aren't here yet, even though the Oculus had crazy sales. Okay, so that is Facebook's earnings. So let's now go to what CNBC had to say about Google's or Alphabet. Alphabet is the company, the parent company, what their earnings looked like and why Alphabet was up this week, okay? Facebook down this week, Alphabet up this week. And this is why, okay? So their earnings per share or EPS was a beat, okay? That means they beat expectations, okay? So EPS was 30.69 versus 27.34, okay? And the revenue was higher too. That was 75.33 billion versus 72.17 billion expected. That's a beat. Wall Street said, okay, you beat our expectations. This is awesome. Okay, and they have a stock split coming up. They have a 20-for-1. So basically, if you have one share of Google as of July, you will now own 20 shares of Google. Okay, so there you also have a stock split. And the street loved that too. So these are all reasons why Alphabet rallied after their earnings report. Okay, so we have two different ones, but is that surprising to you guys? Is it really surprising to you guys? Like after going through and thinking and doing like a thought process of the apps and what people are using in your family and your teenagers are using and what you are using, does it surprise you? Okay, so I probably should have talked about this more, but what are earnings, right? What are earnings? I should have probably talked about this before I even went to there. I'm sorry about that. But okay, so this is straight out of Investopedia. So they have 4 bullet points here about what earnings are. Okay, so earnings happen 4 times a year. Okay, and that is considered on Wall Street earnings season. Okay, and usually earnings season is kicked off by the banks, and we talked a little bit about this in previous chats as well. So earnings refer to a company's profits in a given quarter or fiscal year. Earnings are a key figure used to determine a stock's value. Yeah, like all of Wall Street looks at earnings. They all do, okay? And what they do is they are comparing the actual earnings that were reported on that day versus the estimates. And I'm actually going to tell you a little bit about where the estimates come from too, because that is important to know, okay? So a company's earnings are used in many common ratios, okay? And earnings have a big impact on stock price. And as a result, the numbers are subject to potential manipulation, okay? So with that said, where do these estimates come from? So right now, there's 2 main leaders in giving estimates. There's Refinitiv and then there's Zacks, okay? They actually compile these estimates that Wall Street uses to compare whether or not the companies that are reporting earnings are in line, exceeding, or below expectations. So this is from Zacks website, okay? So they're talking about how these estimates come out, okay? So listen to this. The best and most widely used source of earnings estimates comes from brokerage analysts. So your sell side desks. Okay, so there's 2 types of desks on Wall Street. There's the sell side and there's the buy side. And the sell side desks have analysts that are specific to certain industry groups and certain companies. And these analysts know these companies inside and out, upside down. They know everything about these companies, okay? So, and they keep going on here. They say, these analysts work hand in hand with company management and independently to analyze every aspect that may affect future earnings, okay? One of their main tasks is to determine what a company's earnings will be. This is where they excel, not in their ratings, but in earnings estimates known as earnings per share or EPS estimates, okay? So consensus estimates. So what these aggregators do, which these companies like Refinitiv and Zacks do, they take all of these estimates from all of these individual analysts, okay? And these are called consensus estimates. Okay, so this is what they write on their website. So from these individual analyst estimates, Zacks creates a consensus EPS estimate, which is the average of all the estimates made within the last 120 days. Older estimates are not included. Okay, that was a lot. I just taught you guys a lot, and your head is going to blow up. Okay, I have a visual for you. I have a visual that I think is going to explain this really, really super well. Okay, imagine a roulette table. Okay, imagine a roulette table. Okay, and so you have your black and red, and then you have your numbers on the outside, right? Now, imagine instead of those numbers on the outside, it's all of these analyst estimates. Okay, come on, so all these analysts put together an estimate, right? And then these 2 companies, or in companies like this, create so sort of compile them all and create a consensus, right? But if you think of it from just like just the analyst point of view, right, with all the analysts around it, and think of the ball dropping out, right, and like ding, 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 ding. That's kind of like what a company reporting earnings is like, right? It's like the ball dropping, or even in the lotto, like that could be another one. You know, when that ball pops out in the lotto, right? And you're like, I'm a winner, or I'm not a winner, I'm a loser, right? Well, that's kind of what the analysts are like at the same time. They're like, you know, and it's so the analyst could be a winner or a loser, but also the companies are winners or losers, okay? By meeting, exceeding, or missing. Does that make more sense? Does that make more sense? I hope so. I hope so. If it doesn't, please let me know. If you have any questions, feel free to reach out. I will try to explain it better. But you can have earnings season is one of the best times of year to be a trader because you have a lot of volatility to the upside, to the downside after all of these earnings releases. And one of my resources I love for earnings, for historics, and for estimates is the NASDAQ website. Yeah, NASDAQ.com. I sometimes find like the Fidelity and the TD Ameritrade estimates are a little bit wonky, but I really, really find that the NASDAQ website does a really good job at the visualization of them. And it's free. It is free. So if you're looking for future estimates, if you're looking for historics, even like PEs and like historic dividends, all these things can be found on the NASDAQ website. That's NASDAQ.com. It's a really super great resource. I encourage everyone to check it out if you're interested in learning and looking at, you know, estimates and whatnot. So moving on. I saw the best story this morning that I wanted to share with you guys. And you know how I love to really break things down and humanize the markets and what goes on in the markets. Well, Malcolm Scott today, in their New Economy Daily newsletter, had a really fantastic analogy to monopoly and what's been going on with the stimulus and monopoly. And I really want to read this to you guys because it was just so right on and so humorous that I was like, you know what, this is so good. This is so good. I got to share it. So this is written by Malcolm Scott from Bloomberg's New Economy Daily. And he called this excerpt game theory. Okay. And what he's talking about monopoly. And he goes on to say, during COVID, that monopoly was the game of choice, something we spice up with a few rule tweaks, such as periodic auctions of unsold properties, a secondary market, and creative financing from me, the central banker. And okay, I love this. I really love this. Okay, so to go on, he goes on to say, after a flurry of purchases early in the game, right? We all can relate. Like in the beginning of the game, you like buy as many properties as possible, right? And then he goes on to say, and we found ourselves short of cash. Yes, you know, that is exactly what happens in Monopoly. You like spend all your money to buy all the properties, right? And then you're out and you're like, you hope that somebody lands on your property so you can start making money, okay? And then he goes on to say, no one could afford the properties we were landing on. Auctions attracted no bids, okay? The game ground to a halt. We were in a recession. That's exactly, you know, what he's talking about there in Monopoly is very similar to the way it works in the markets, okay? So then he goes on to say, like any good central banker, I sprang into action. I slipped everyone a couple of $500 notes and pledged to keep doling out cash for a few rounds to come to add a little certainty to the outlook. Yeah. How many people have actually done that monopoly, right? So everyone runs out of money and you're like, okay, we're going to start like handing out money a little bit more so we can get this game going, right? So we can start going on. And also like putting more money in the center of the pot. So if you land right on free parking, you get more money from the center, right? Okay, so then he goes on to say, in policy speak, it was akin to opening the fiscal purse strings backed up by quantitative easing in the form of helicopter money with forward guidance to boot. Okay, I love this. I love this story. It's fantastic. Okay, so sure enough, right? Asset prices roared back. Properties that a couple of turns ago were being passed up were rocketing higher in the auctions. Houses were snapped up. Hotels followed. Soon, we each had a healthy income stream as rivals landed on our real estate, right? Because they infused money into the game, right? It started booming again. And he goes on to say, the game continued on and on. The economy had been reflated and was humming beautifully. It was time to stop the qualitative easing. Okay, so the central banker is like, okay, I don't need to be giving out money anymore because the economy is humming. Does this sound familiar? Yeah, this sounds familiar, okay? And that's the moment many of the world's biggest central banks now find themselves at, led by the largest of them all, the Federal Reserve. I love this. And if you have a chance to read it, for sure, it goes on, but it's a really good analogy of what is going on in the markets. Kudos to Malcolm. Thank you for writing that. And I hope you guys enjoyed that as well. You want to read it further. It's called Game Theory by Malcolm Scott, and it was in today's Bloomberg New Economy Daily. Okay, so now it's time to move on. Oh my gosh, I've been talking for 45 minutes already, and I haven't gone through everything that I want to go through. So let's see. Okay, in the interesting. So each week I look at news headlines and I bring up like strange and interesting headlines that came up. And these two items these two items came out of Bloomberg Green newsletter. And the first interesting headline was, imagine taking a long hot shower without wasting water and energy. How interesting, right? So that's the guilt-free promise of recirculating shower, which continuously filters, sanitizes, and reuses water that would otherwise go down the bathroom drain. The technology reduces water consumption up to 90% and energy use by 80% compared to a conventional shower, according to manufacturers of the devices. And these devices are made by a Danish company called Flowloop. So if you want to read more about this really interesting product, it's the company is called Flowloop, and this recirculating shower is called EcoLoop. Just imagine with all the all the countries struggling with water issues, how amazing that something like this would be to reduce water waste. I just thought I saw this and I'm like, wow, this is really neat. Again, maybe I don't want to be the first one to use it, but I think it's a really neat idea. And then the other headline that came across that I was actually really surprised about is it has to do with gas burning stoves. Okay, so gas burning stove or convection, people. Gas burning or convection. So I had a convection stove and I did not love it. I love my gas stove. I love it. But what I didn't realize was that they leak so much methane across the US, even when the appliances are not in use, that they have the same impact to our atmosphere as 500,000 cars. Can you believe that our gas stoves leak so much methane that it has the same impact as 500,000 cars? And that was by a Stanford University study. And the research comes as communities nationwide debate whether to ban natural gas use in new buildings as part of the fight against climate change. Okay? And they are looking to switch to electric stoves. What do you think about that? I'd love to hear your opinions on that. If you have an opinion on that, definitely message in. I'd love to hear it. So in closing, I like to leave you with an inspiring quote. And today's inspiring quote is, "The world is like a mask dancing. If you want to see it well, you do not stand in one place." Let me repeat that. Let me repeat that for you. The world is like a mask dancing. If you want to see it well, do not stand in one place. And that is by Chinua Achebe. And what my wish for you guys, what my wish is that you do not stay stuck in one place with your financial situation. I wish for you the courage so that you can move on and take control of your finances, your money, and your investing. And should you wish to take this journey outside the coffee talks, check out my March classes on my website, herfiniq.com. I'm Jessica Perrone. I'm the founder of Her Financial IQ. You have been watching the Her Investing Coffee Talk. And may the markets be in your favor. Until next week, bye-bye. Take care. I'll see you next Thursday, 10 a.m. Bye now.